Hello, friends. I'm Giuliano. It's the 4th of January, 2022, and I'm here to share with you Bitcoin price chart. I'd like to go over some ideas of 2021, 2022, and beyond. I'm going to share the screen here and move into this Bitcoin price chart. Thanks for joining me. Hit that like button, subscribe if you're interested for more. Friends of Technical Analysis, I'm here to share some ideas, some potential directions. We'll get to that in a moment. First, I would like to look at some of this current correction and the shape we're in. So to do that, I'm going to load the chart layout. I think first we'll talk about the flat. We're pointing right at it. Currently, what we had for the previous year was basically this kind of action here. And we're still in it. It's quite flat and sideways rectangular, and not quite complete, it feels like. So what a year. Big highs, crazy lows, and a lot of head fakes and interesting dynamics, it seems. Well, currently it looks like we are continuing this impulsing down. Are we making it into a flat pattern? We'll see. We will definitely see if this kind of sideways flat pattern works itself out. The other option is just a slow churn to the side, and we'll look at it during the count, the Elliott count portion, but basically we're looking for this next low to signify potentially a change in structure of part of the cycle, whereas we have impulses and we have corrections, and therefore right now we're looking to complete something, and we'll see how that works out. So stick around for more. We have time frames here we're working with. We've got 2022 here, end of January. We've got into February. That seemed to play out interestingly. And then we have even up till here in the end of February. This cluster of time is looking very promising. So is the June time. There are some time, time analysis that bring these clusters, bring them out further based on some of the wave movements. So we'll take a look at that too. So yeah, currently, I think things are still holding according to the basic idea. There is still the potential for the triangulation upward, and we'll look at that. Or I should say, yeah, like upward, you can call it. But, at this point, this flat pattern seems like the most lucrative candidate currently, but we'll see very soon about how it continues to, does it dump, does it just flatten? All right, so let's see. Now, what we're looking for is what else might be happening. If we're not going to do a flat pattern that moves down towards, let's say, the 38 or 36,000 level, maybe we're only, maybe we're still going down, but we're going to hold this 61.8% retracement from the low here of this beginning of the B wave to the top of the B wave. 61.8% retracement is here. So we'll see if that's what holds. But still, the idea of this flattening at the beginning of the year here in January and into February, I shouldn't say flattening. Yeah, but potentially flattening. When I say flattening, it's more of a bit of a sideways direction like that. Oops. Before the up. And the other is just the more of the impulsion down for this C wave. That's the other opportunity that we have here. And so we're going to watch that happen over this next month or two. I'm not going to talk about fundamental analysis currently too much, but even something like why might there be selling for example, in Asia, maybe relating to the new year of the lunar calendar, new year, and those type of things into February, and then we can move upward after that. Maybe we'll see how this is going to work, right? So stick around for more. None of these things are guaranteed, but we're looking at what's possible and figuring out what might be more probable. And we're going to use some Elliott wave understandings, logics, Neowave, Neely method style to consider some ideas. Okay, so to do that, that's the general flat pattern. We've been considering this as a strong possibility for a little while now. And then we're going to look now to load the chart layout of the, where are you? It's up here. Is it BTC daily action? Yeah, maybe. No, I don't think so. No, it is not. Where am I looking here for the chart layout? Let's see, friends, where did it go? Oh, test 2, that's why. Remember your names. Okay, well, I don't want to talk too much about the current scenario, but you know, interestingly, we are breaking down of this uptrending support line here. So we'll see, we're still hugging this downtrending support line, but that's what I mean by kind of narrowing sideways and down versus the difference between that and just basically cutting below this trend line and making it stop. And that's what I'm thinking needs to come if we're going to continue a proper impulsion in a proper C wave. Otherwise, well, when I say proper, I mean just something that would instill and instigate a lot more cleansing in the sentiment and in the prospects for a strong V recovery and that kind of thing. So that's the general idea of this this potential flat, and that's because it revolves around a bit more of an Elliott wave count where it'll come to play to see that, yeah, after whatever we're going to complete here, whether it's a flat or a triangulation or even something else, like we'll look at the other bearish case, but flat or triangulation pattern as a potential fourth wave, and then we'll go to our fifth wave. Okay, so let's see. Let's go over to the weekly time frame where we have laid out here this potential triangulation. I'm going to show you a few measurements to show why the triangle might be set up this specific way. And then with some extension tools, we can find the price action between like 112, 110 to 140 or 150,000. We could also involve some sort of channeling. Well, see, the channel, it's not so much the channeling, it is a bit of the channeling because we use the first, potentially first wave here. But what it also is where is this end of this fourth wave going to be? Whether it's for the flat pattern, we're going to find our trend line, our 2 to 4 trend line, which will come in handy later as we're trying to confirm when the market has turned into a bigger correction again. So that 2 to 4 trend line, we're going to look for it, but this channeling seems potentially appropriate based on also the, you know, this wedging of the triangulation. If we have an A, B, C, D, E, where the E could potentially even touch all the way down at the lower end of this triangle, maybe the triangle itself ends up being something more, something a little bit more angled, with less, you know, less upside, a little bit more, a little more flat. I could probably give a bit of a lower price, but okay, when we get in there, when we start zooming in here, start to see that there is a potential correlation with some of this pricing here to move higher in this this zone here. The other option is, you know, around the June time where we can really complete this whole triangulation and move higher. Maybe not June, maybe May or something like that, right? Some type of idea. And why is the timing like that? Is because, well, we're looking to compare the A wave and the C wave, and then the B wave and the D wave, and then also the D wave and the E wave. And really, Why is the channeling here? It's because potentially this this triangulation, wherever it's going to hit, the E wave will likely not come down to the bottom. But you know what? It could just, there are possibilities if it's a non-limiting type of triangle. I mean, it could even come below the triangle going before going higher. But I get the sense that, okay, fine, let's just see if it follows certain strict rules. Because whether it's a triangle like this or whether it's a flat pattern like we saw potentially before, I think it will follow it pretty well. Seems to be following it so far, even though it's in a confusing and it seems like a growing, expanding kind of way, where this whole pattern, like this whole thing, the topping and then this correction of the previous wave is taking quite some time. So having said that, let's check an idea here. This A wave compared to the C wave will be about 61%, because I'm imagining the C wave will be smaller than the A wave, so therefore it should be about 61% of the A wave. The A wave would be 1.618 of the C wave. And similar for the B wave and the D wave, and then similar, we'll find some relationship with the D wave and the E wave. So let's do that, and then we'll do it with time. So I'm going to remove hope you're enjoying this. Hope it's giving you something to think about. You can keep that there. I'm not really concerned about that. Hide that. Okay. And let's hide the moving average, the Ichimoku. We know that they're there. We know they can provide support, especially in that flat pattern action. But even here, potentially in the triangulation. Okay, so let us look here at the extension tool. We'll go from top to bottom for the A wave, and then we'll go from top to bottom for this potential C wave. So we go top to bottom, let's call it. And we're using closing timeframes on a weekly basis. And therefore, you know, this is not a pure Neowave method of proper charting, but we're taking the concepts and the ideas. So what do we have here? We have a retracement of this, or sorry, an extension of this A wave, like a comparison where one A wave is equal to 0.618. The C wave is 0.618 of the A wave if it ends around here. Okay, that's interesting. What we've done is taken the extension tool, compare the A wave and the C wave. Now let's do that for the B wave and the D wave. So we'll do that. Oops, extension tool. We'll go up this time, B wave to D wave, because that's their direction. And we'll start where we said the C wave might be around there. And so around there, which would, you know, this triangle is more, how do you say, strong and bullish than a flat pattern like that. The flat pattern brings you lower down, whereas this triangle would potentially rise where it's finding this support on it confluences nicely. 61.8% of this A wave is down here at this 61% retracement of roughly of the B wave. So that's pretty hot if you ask me. But anyway, so that's that idea. And then we compare this D wave. Here's the 61.8% roughly, so something around there. And then let's compare the E wave. So we compared just now the D wave to the B wave. Okay, now let's compare the D wave to the E wave potentially, and that will be with a retracement tool. Here we'll take the D wave and compare the E wave, and that's roughly a 61.8%. So if it's really strict on its triangular relationships, then 61.8% or even a 38.2% at the 61,000 level might be the takeoff zone, okay, at a 38.2%. So something like that, whether it's here or here, that would be generally the level, okay? Those are levels. Now we'll look at, that's price levels, horizontal axis. We'll look at the vertical axis, the time levels, and this will be interesting. So we'll take the time and we'll take the A wave and we'll go from top to bottom and we'll compare it with the C wave. So we'll go here, boom. And here is about 61.8% of the A wave right here. and that's roughly at the week of the 10th of January. So very close to our 24th of January week, which is confluencing there. So I think that's interesting, definitely. Let us then take the B wave. Oh, by the way, just going to show you this. If we take the C wave potentially here and compare it with the A wave, we're going to see that it's 1.618 roughly. Okay, you see here the 1.618 of, let me remove this volume, sorry. By the way, if you have any feedback or any comments, definitely please share and, or, in the comment section. If you want to share this with other people, that's great, please do. But anyway, we have this 1.618 is this A wave when related to the C wave that we compared it to, okay, as you see here. So now we're going to compare the B wave to the D wave, and we'll say, boom, roughly about this bright green here, this neon green is about 61.8%. Okay, so that's about 61.8% of the time, okay? And then we're going to compare the D wave and the E wave, and we will say D wave starts here and E wave is about, here we have it, 61.8%. So that would be the triangular idea, okay? And how did we get this box zone? Well, one way was to take the A wave and consider the thrust from the E wave upward. And when doing that, I'm going to get rid of this time frame. Oh, wait. No, okay. So let's see here. Yes, so we want to do the extension tool. We'll take from the bottom to the top of the A wave because we're going to go up in price. And we'll come to where, either to the E wave here, where it starts, potentially. And you see how the 1 to the 1.618, it pretty much bounds this zone here from about 105K, 110K to about 150K roughly, okay? That would be the extension of this A wave here. That would be that kind of move. Now, the other option is that it would only be 75% of that move. In a Neely method, it's generally about 75 to 100%, or to 125%, I should say, of that move. Please correct me if I'm mistaken on that. But yeah, so that's that idea. That gives us this region here, whether it's 91,000 for this thrust up before hitting some resistance or whatever ends up happening. Maybe the wicks go up into the 100K, whatever. Anyway, you get that idea, okay? The other option here comes when we start, interestingly enough, watch this confluence, when we take the extension of this recent wave, okay? And we bring it to the E wave here. We start getting, oh no, sorry, not from there. We're going here. Yep, we're going to this wave here. We get about 61.8%. Well, it's not showing so well here. I'll have to do it on when we look at the count. But either way, there is some confluence here. If we go to the bottom of the wave, you're getting roughly 38.2% of this whole move from this ending of the correction. 38.2% brings you all the way up to the 161.8 at 150K. So there is some potential there, but generally, I guess this level here of 100K is within reach, and we can see how some levels can be played out in that sense. Now that's the triangulation idea. The other one is the flat pattern, and I think I'll use that in the Elliott wave count. So I get the sense that we're still, either way, when we look at the timing on this price, let me just speak this candles. When we look at the timing on this price, whether it's going higher like this from here, there's potential here for a little bit more time and a little bit lower, but I get the sense as it's coming down, it's gonna have to dump. It's gonna have to freak some people out. But then again, maybe there's gonna be a lot of shorts that build and people are waiting for it to dump, and it just kind of shoots the other way and wrecks the shorts and gets some people who were able to get long there. You know what I'm saying? And then from there, it'll be tough to really fight back down to these levels. So that would make sense for this upward triangle. So we don't know for sure. We're going to watch it. All right, next, let us take a look. Save that one. Let us take a look at the macro current cycle count. Whew, okay, this is going to be interesting. I currently have this time wave here, let's call it, using the fib time tool, time zone, and it relates to the echo. This is the kind of the idea of the echo of the first wave. Now, before we get to the, where is the first wave and all that, I think that's what I would like to discuss. Oops, hope I didn't get one. That's what I'd like to discuss. Oh yeah, this is the top to the bottom. So that's another interesting indicator. But I'm going to hide this. I'm going to hide this. Okay, let's talk this through. I'm going to go to a weekly time frame. Wow. And okay, let us hide all the drawing tools. Okay, so I just want to mention in this whole chart and the previous price action before that, we are definitely in impulses and corrections, impulses and corrections. Are they connected to each other in some sort of bigger degree, Elliott wave, macro wave, grand super cycle count? Yes, but what is the connection? It's hard to tell yet. However, I think using some basic principles, I come to the conclusion myself that this March timeframe is the beginning of our current impulsive movements, and that the previous action was still part of the corrective move before it. And that's because of the trend line touch points. And so, I mean, looking into Elliott wave, thinking a bit more closely, it brings out this touch point as the end wave before a new impulsive move. And clearly we have impulsive moves and corrective moves, and therefore that's why I'm going to use this point as a starting point. Although we can channel this big wave here, this big wave up and down, this cycle here. However, we can channel it and it can potentially lead to interesting support levels and stuff like that. However, yeah, the March 2020 is the beginning, in my opinion. And what we have here actually is all the same degree. We have impulsion, correction, impulsion, and we're currently in correction, and we're looking for the next impulsion. Now, one thing I'm thinking is this impulsion here started in March. The first wave lasted till about May. Then we correct into this, what looks like a running type of correction. Could be a complex non-standard correction where you have okay, let's get into this. You have this impulsive move up to here, and then it corrects here potentially. Maybe you say it's up to here in the beginning of June. Okay, fine, whether it's May 11 week or June 1st week, but I tend to think it ends May 11 week, we start correcting. It makes this corrective pattern here, and then X waves up and continues the correction. Because again, with those trend line touch points, okay, I'm going to bring it in now. When we start here, oof, actually, what I'm going to, yeah, whatever. If we go here, okay, with our trend line, you see how we go from this low to this low here, but then the move goes up and then breaks down below it, and it's so much action below it that it can't do that based on the Neowave Neely method logic. So here actually would be the end of this correction, And it would and the reason I don't think it starts here, I don't think that the first wave goes all the way here to August, is because then the correction, the time period of the correction seems so insignificant. But when we bring the potential for the whole correction to have started either in May or June and last until September, end of September, then that gives a decent amount of relational time to this current correction that we're in. And also the impulses are much more clean and straight up impulsive. Okay, so that's one idea there. So what do we have here? What are some main ideas I want to get through? And by the way, thanks for sticking around. I hope this is enjoyable for you and you're getting something out of it. But okay, fine. Here we are. We are here. Okay, maybe number one, maybe we go down to some level, fine, whatever that's going to be. That's least likely, in my opinion. So I'm not going to talk about that, but it's possible, okay? Next, the next idea is, okay, to understand where we are, we can use this Elliott wave idea, understanding, yeah, we're in an impulsion here, and we're probably, it looks like we're making, you know, a series of wave up, correction, and we're looking for the next wave up. Now, there's two options here. Maybe this next wave up, okay, 1, 2, 3, 4, maybe this next wave up is just the last move. Okay, so what we're going to end up having here is, does this cycle before the next same degree of the whole move, same degree correction, when does that start? So if it starts in 2022, so if our cycle from, you know, the 2020 reaches to 2022 at a topping, then that's what it will be like. We'll make our fourth wave here, finish it off, and then we'll make a fifth wave impulse. And then from there, we'll make our correction down. And that's what this yellow arrow up and then down represents. Does that make sense? So that's if we get an impulsion here, and that could be anywhere from, like, we might fizzle at a $72,000, $75,000 level, or more likely we would reach up to probably into that 100K level and then fizzle down. Now, here's another option. The other option is that we actually, instead of ending in 2022, is that we actually make it all the way into 2023 for the big topping before the same degree of this whole move from March of 2020 all the way, let's say, into 2023 would have its same degree correction, okay, whatever that is to mean. Now, in this idea, for me, that means that the fifth wave here, okay, although I know I have it up here at like $600,000, there is definitely an option for about well, mainly it's like the 400 level. There is an option for a 400,000-ish Bitcoin, okay, 488 or whatever it is, that type of idea, 464, whatever it's going to be, right? There is definitely that option. But then, you know, more realistically, when I really look at it, I have this box laid out here. I do get the sense that you know, it's more realistic to call for that 120 to 150 or to 220 type of layer. So like 120 to 220 type of a zone. And that, you know, I have this big arrow up here. Maybe that's not going to come so soon. Maybe that would be a slow grind to get up there by the 2023 timeframe. But instead of being all this way up here, it might just be at this level here. Okay. Because, you know, I'm using this big fat channel here that takes into account the first, second, third wave here, down to potentially the fourth wave. And so we channel that. That might be a little bit too ambitious. If instead we just channel, let's say, the first wave and the second wave and find out where that goes, maybe that it works that way. However, this wave is small compared to the third wave. The first wave, when we look at some comparisons, we're going to see the third wave is about 261.8 of the first wave. So anyway, okay, so I'm going to get rid of this big channel because I don't know if that's necessarily what needs to happen. But what would happen in any case is, see these in this kind of a move, especially if the fifth wave is extended and subdivided like this, then we would see this widening of this channeling, of this impulsive channeling, okay? So if we are getting this extended fifth wave into 2023, which I actually think that's probably the best possibility, unless there's like a lot of bad asset price deflation and all of that kind of stuff. But even then, I think that these chops, these big dumps, they account for big, big turns in market sentiments. For example, this potential chop here from 100K, 120K down to, I don't know, what, like 75, 70, 65K is a 45% drop. I mean, that is on par with a general Bitcoin type of movement in terms of volatility. And it relates to a potential, 61.8% retracement. That's why I put these turning points, these inflections where I did, because they relate to impulsive retracement zones. And I'm being generous, I'm bringing it down to 61.8, but as we see here, it might not have to go down that far. Anyway, we'll see. So that's the kind of idea that we're seeing there. I'm going to just get rid of this channeling here, because we don't know if it's going to be a fifth wave extension. And it doesn't have to be subdivided, but I'm guessing if the fifth wave is extended here longer, then it will be subdivided. Because look, if we take that fifth wave extension, this is generally, if it is going to be a fifth wave extension, then it's probably going to be a 1-to-1 relationship with the 1 to 3 wave. 1 plus 3 will equal 1-to-1 with the 5. And if we were generous with where the C wave comes and dumps down, maybe around like 34, 35, 36 level, even down to 34 level, we're looking at a $420,000 Bitcoin if we're extend, and that's an internal relationship on the 1-to-1 relationship between 1 plus 3 equals 5. So that's possible there if we're really doing it that way. Does that make sense? I hope so. Okay. The other idea, no, I think that's maybe less likely, but you never know. I mean, what do I know what's coming into 2023? $420,000 Bitcoin might be understandable then. We'll see. Okay. Let's take that off, because here's the other thing though. When we start looking realistically at, by the way, I just want to note, like, even if we move up to 420,000, right, we could retrace from there down to the $150,000 level and still be down 70%. We could realistically have an 80% drawdown down to like the 100,000 level from a $400,000 Bitcoin. And that would be very much an impulsive move where everybody's FOMOing in, and then it just crashes and wrecks and get people dumped 80%. But that's after many times maybe people are going to be thinking, oh, because, okay, so now I'm trying to think, what's the conditions of this market? What are the market participants thinking and feeling? Well, they're very exuberant and very confident, but then, they're like, okay, it's done, we're done, it's done, this was it, and it's coming down. But then market participants en masse actually say, nope, we are confident that this is the right place to get it, and it just continues rocketing higher, and it just keeps shocking everybody, because like, okay, we're done now, it's coming down, and boom, no, one more time, and then finally everyone's like, oh wow, it's gonna never change ever, and then boom, all the way down. No, it can never go down all the way to 100,000. That's like 80% down, and it does. And there we are in like 2024, 2025 at potentially 100,000, or okay, fine, maybe it's 100, 200,000, whatever. That's if we go to a 400K Bitcoin, right? Like, that's pretty wild. The other option, though, is to get to this level here, this time frame here, I should say, but maybe only at this zone here between the 120 and 220 range. And I think that's actually the best possibility, in my opinion. Just it's the most conservative for me, because it allows a ratio relationship where actually the third wave is extended. Okay, because it is such a big wave compared to the one wave. So the third wave is extended, and then the fifth wave, then even if it's subdivided, see, because we have the independence rule, the subdivision and the extension don't have to be the same wave. So maybe the fifth wave becomes subdivided as it marches up impulsively towards the top here, around the 100,000s level, the 200,000s level. Okay, and so yeah, so that's actually what I think is a good chance. And then the second chance is to go to 400,000 by then, in which case we might even hit this first target here, like sooner, you know, even in 2022, later on in the year, but we'll see about that. Okay, so those are a few options, and I want to just justify the count that I'm using so you can understand it and see what's happening here. So I'm going to get out of that thought process. I'm going to get out of this thought process. I'm going to just get out of this thought process too. And yeah, you know that I'm thinking possibly it goes there. So let's get out of that. And here is this. So those were the two ideas, really. It's either we go like we're going high, or maybe it's down here. But we're getting something like this with this like subdivided move, extended if we're going to the 400,000s, and just generally normal if we go to like the 100 to 200,000s, whether it's by 2023 or 2022. If it's by 2022, then I think it's not going to be subdivided. It'll just be a strong impulse one-off, and then we're going to correct down. But yeah, I think that's actually the least likely of the three chances. I think number one chance is this range here, number two chance is here, and number three chance is to end here in 2022. However, yeah, if we do end in 2022, I think it'll be cheap. It'll be weaker, and it'll end around maybe around the 70K. But who knows? Maybe it'll end around the 100K first. That's fine too. Okay, so let's figure out how that works. So the orange count is the ending in 2022 count. That's just a simple 1, 2, 3, 4, 5 count, and we're currently in whatever is the 4, whether it's this flat pattern or what's going to turn out to be a triangulating pattern. The green count is the longer term extended fifth wave count, whether it ends you know, lower down here in this zone here around the like the 200,000 levels, or whether it ends in the 400. Whoops, that's a little high. Whether it ends down in like the 400,000 levels, that's fine. It'll look like some sort of subdivided. So instead of this 5 wave move, it'll be something like a 1, 2, 3, 4, 5, and then make its correction. So that's the kind of idea I'm looking at. But I don't know, like I would say, to be fair, it's kind of 50-50 right now in terms of what it'll look like. But yeah, you know, even going up to the 100K level and dumping down still allows for a continuation here in this subdivision here. We'll have an extended third wave, a subdivided fifth wave, and they relate in this way. What we'll have here is this first wave, roughly, okay, and then from here, we go here, we're roughly around the 261.8 level, okay? It's not super clean, but it's fine. And interestingly here, what I did was I checked the 3618 and 4236 extension of the one wave, so that potentially these zones here, like the 104, 105,000 level and the 136,000 level, are definitely related Fibonacci-ly to this potential one wave here as the fifth wave. However, more importantly, we're going to look for a one-to-one ratio with this with the one wave, and then what we'll also look for is a 61.8% ratio of the third and a 38.2 ratio of the third, and see where they land. So let's take this extension. Let's get a little bit more intimate here with the one wave, and we'll go in and we'll say roughly from, let's call it around the 36K level just for fun, but we don't know exactly where it'll be. And one-to-one leaves us not too solid here with the one wave. One-to-one with the one wave doesn't really, you know, it's like barely it's a pretty failed fifth wave. Okay, if we're taking it internally. If we're taking it externally, then we're looking at something like potentially that 106,000 level. So yeah, if it's an external one-to-one, that confluence as well. The other thing is, if we relate the I'll get rid of this. Oops. If we relate the third wave starting right here. And I'll show you why I start where I start after. Then here is, again, interestingly, let's say, okay, sorry, let's say we're at around the 36K level. Interestingly, the 61.8% retracement of, extension of this third wave is around that 106K level, and the 78.6 is around the 142 level. So those are significant levels there. So I would adjust the 1, 2, 3, 4, 5 accordingly if that's the levels they're going to in the longer term. But if it's just going there first, as part of this first wave here, that's where this green version comes in. Let's make it a little brighter. That's where this green bright version comes in. The red version comes in a little bit lower there. Maybe that's where you have like that 61.8% or something like that, and it comes down to a 2 before going to a 3, a 4, and then a 5 at the top here, something like that. Okay, that's the other potential. So whether it's lower or higher, that's what the fib levels are for. You're kind of looking for zones and ideas and areas where it might go. Now, that's a 61.8% of the fifth wave, and a 38.2 is around the 70% level. 70,000 level. When we get a little bit more accurate, maybe it's around 72,000, which we've seen before as a significant potential level based on these movements here in the B wave. So that's also a potential, but I'm guessing something like the 61.8% is more reasonable. And then I don't think you're going to get a 1-to-1 of the third wave, right? That would not make sense from an Elliott wave perspective, because the third wave is extended, and you need one wave to be extended. So the other consideration here is maybe 1.618 of the first wave, because the third wave here, let's get in this, oops, wrong button. The third wave here is third wave is roughly, let's call it about 261.8 of the first wave. Okay, just a bit more than that. And so if we want to see the fifth wave with a bit of strength, but it's not going to be as big as the third wave, then we'll look for 1.618 of the first wave from around that 36K level, and that's when we start again to reach around that 100,000 level. Okay, and if it's an external 161.8, we again are reaching around that 150,000 level. Okay, so yeah, those are some possibilities here. And now I want to explain, well, first I want to show a bit of the time. I want to show that time zone. It's like we're going to take a reverberation of the first wave with Elliott numbers and Fibonacci numbers. Sorry, not Elliott numbers, Fibonacci numbers. Boom. And interestingly enough, sorry, we're going to actually start it. Yeah, like we're getting this change of the fifth wave here. Of the fifth movement here, some turnarounds. We get turnarounds here. Playing with the times can help to locate ideas when it comes to time. So this is a reverberation of the first wave. I would like to also look at the extension of the first wave. Or, well, yeah. And see the third wave in comparison. But anyway, I think maybe we're getting off on a tangent right now. I don't have any definitive conclusions on this per se. I did have, anyway, I'm not going to go in there right now. Okay, let's just do this Elliott wave idea and why I have this 1, 2, 3, 4, and this potential 5 here. Well, the 5 is just an offshoot of the 1, 2, 3, 4. So with a trend line, you know, again, like I said, we would be playing with something like this. We'd have all this data below. Ah, right. That's why it wasn't working. On the daily chart, it shows better. Anyway, that's that for now. I'm not going to go into it. That's why the timing wasn't working so well. I just realized I'm on the weekly price chart. Okay, no worry about timing right now. More so the Elliott count. So yeah, we want to encompass that data. Therefore, boom, there is your 0 to 2 trend line. And that means the next move, it makes sense that the third wave was such a strong wave because, you know, in the first wave, we had an impulse. The second wave correction ended up higher than the first wave, potentially in this type of count. So there you go. Let's do a look now. Now we're at the second wave and we're wondering where is the fourth wave going to be? And that's going to be where we put our 2 to 4 trend line. And then when that happens, we are going to be able to use that for when the fifth wave breaks and see what the correction is being confirmed or whether the correction is being confirmed or not. So we're currently looking for that 2 to 4 trend line. That's, again, that's the reason why I use this rather than this, because if we were to take, you know, some people like to use the lows, whether you use the lows or you use the trend line touch point from the previous move. I won't go there right now, but let's say you're just using that. You know, if you come here and then you're cutting all this, doesn't work. So we're coming here, boom, there's our, you know, correction to correction. It's like a 0 to 2 or a 2 to 4 trend line, or a 0 to B trend line in an ABC, or a B to D trend line in a triangle. These are significant relationships. Okay, so that's a 1 to 2, and now the 3, clearly we made an impulse up and now we're in some sort of corrective move. I don't think the 4 ends where I put the A. I think this is, again, this is expanding. It's taking more time. It's getting more grand in its cyclical movements, in its rhythmical movements. So also in this case here, I think this flat pattern is looking nice, but in the fourth wave, a triangle is definitely very possible. So this could be just a big triangle that we're going to work out. So that's also possible. And then we get to this potential fifth wave. I am going to go to this daily price chart. And no, that's not what I was looking for. No matter. Okay, so I'm not going to bother with that. Here is so on a daily price level, we really are at the 261.8. So that's why it was the levels were working so much better before. And the 361.8 and the 236 are actually at the 200,000 and the 133,000. So I for some reason I like the daily information a bit better. But anyway, that is what it is. No big deal. It relates anyway, no matter what, and we can get zoomed in as the price starts moving where it's going. But there you have that, and then from there we can compare the third wave with a potential fifth wave, and or the first wave of a subdivided fifth wave. So if we start around the 36 or 37 level here. Remember, I said the 38.2 for the 5 because maybe the 5 will be 38.2 of the 3 because the 3 was so strong. That would leave us around 75,000. The 61.8% leaves us at 114,000, as you see, is the lower band of this zone. And the 1-to-1 ratio, comparing the third wave with a fifth wave, would bring us all the way to 228. So I think that's possible in a bigger move up, where the fifth is also the extended wave, so that it'll be bigger than the third wave, but I think that's just a bit too monstrous. So I don't think that that's the idea. So I think 61.8% of the third wave is very reasonable, whether it's coming soon in 2022 or whether it's into 2023. I think that's very reasonable. And into 2023, then I do think we could see, sorry, this is the third wave, 61.8% of it. And I want to just show again, the first wave extension here, starting around the same area. I want to recognize the 161.8 of the 0 to 1 wave. 161.8 is again at that lower band, the same as the 61.8% of the fifth wave. So 51.8% of the fifth, sorry, 61.8% of the third wave, sorry, is at the 120, and 161.8% of the one wave is at roughly the 120. It's at the 114 here on our daily price chart. So I think this zone for now is the most compelling zone for me, for real. It's such a compelling zone, and I wonder when it's going to get there. Is it 2022 with a strong impulsive move up after this ending of a fourth wave? Or is it going to be in 2023 where we see a lot of moves higher and we end up getting maybe some sort of extended fifth wave and subdivided? But, you know, either way, I think this level is the most compelling for me currently. All right, the other next level is that 77,000 level. That is also the next most compelling level for me. And maybe the subdivision is something more like, whoops, where it's 1, 2, and a 3, 4, and a 5 down here. And we really, you know, it actually takes us into 2023, and we're at about 120,000. That might be our move. I don't know. What we would do is look at channeling, so we can then, you know, this doesn't work so well. Our 0 to 2 channeling has been broken to the downside, as you can see over here. So what we would look for probably is, oops, undo that. What we would look for probably is in a channeling factor, we would look for the 0. Oops. Yeah, we look for 0 and 4, and we'd encompass the 3, but I don't think that works anymore in that sense. So I'm done with the channeling in that way, and we would be doing an impulsive channeling where we would find the 2 to 4 trend line, wherever that's going to be, and the 1 to 3 trend line, and probably have something like that because the fifth wave starts extending higher into this 100,000 to 200,000 range. All right. And I just want to, yeah, like we won't have a 1-to-1 with this 3 and the 5. So if we are extending the fifth wave, I do see us getting to like maybe the 400,000 level by the 2023, because otherwise the 1 and the 3 and the 5 would be 1-to-1, and that doesn't seem right. And then the other option is a 1 and a 3. If we have an extended fifth wave, 1 plus 3 is 1-to-1 or equal to 5. And I think that's a bit too massive. If we do it that way on an internal relationship, well, no, actually that was probably one of the ways that I found this. That is probably the way. If it is an extended fifth wave, then it would in a good likelihood, have an internal or external relationship, and probably I would say internal relationship. External would bring us to 850,000. So let's say internal relationship of 1-to-1, where 1 + 3 is equal to 5. And so that would potentially be it. Now, these are all speculation in terms of the levels where we're finding the end of the fourth wave and doing all that. But you know, I really look forward to moving with you throughout this. And again, let me just do that reverberation from the first wave, and we'll look at some time. And there you have it. There is some time reverberations. We are nearing the 13, the Fibonacci 13, which is just after that March timeframe. So we'll see what that portends, if there's anything there for us. But it doesn't seem to be showing anything spectacular. The other thing I wanted to look at is to compare though. No, that's not what I'm looking for. Anyway, I think we're ending this whole saga right now. So yeah, interesting. I'm just playing around now, wasting a bit of time. All right, friends, thank you so much for being here. I hope this was interesting for you. I hope it was educational, entertaining. Let me know what you think. Yeah, I definitely look forward to it. And I look forward to seeing what 2022 has in store for BTC. And this could be a terrible wrecked scenario for everyone, or it could just be like massive sideways. But I think this Elliott count is favorable and reasonable. And at worst, at least, we still have a fifth wave in us up to some decent, significant level here. And we're going to watch it as we go. And I hope you stick around with me. Until next time, I'm wishing you all just as much love and peace and happiness as you can manage. And that's about it for me. Once again, I'm Giuliano. Until next time, goodbye.